Hi, this is George. In this video, we are going to see about covered call with NiftyBees. Before getting into this video, please subscribe to this channel and also please join our Telegram channel and also please do like the video if you genuinely like it. Let's get into the video. So this is actually a very conservative strategy. So before getting into what is the strategy that we are going to do with the NiftyBees, we need to know what is covered call. We need to know what is NiftyBees. Those basic things we just need to know. So what is covered call? Generally, people do covered call in stock options where they go long in the underlying asset. Say suppose if you're like a individual stock, maybe Infosys or ITC or HDFC Bank, anything, you name it. Say suppose the lot size is 5,000, then you buy 5,000 equity share of that particular company stock and you sell one lot of call option, maybe little far out of the money, 10%, 15%, whatever, depends on your like risk appetite they used to sell. That is how it is, and because of that you will get rental income. That is the basic idea behind the covered call. In this strategy we are going to use NiftyBees. The only reason why we are using NiftyBees rather than the individual stock is because than like a normal stock, which is mostly like maybe news oriented, result oriented, or company oriented. Say suppose if you have hear a news that maybe a company has a very spectacular return in the previous quarter, something like that, then the stock may shoot up. Say suppose if there is any fraudulent activity, something suspicious happening, the stock price suddenly falls down. So these things doesn't happen so much in Nifty. Whatever happens, it might move maximum 3-4% in a day, but not in the case of stock. It can even rally 10%, 15%, and in a month it can even go to 40-50% jump in, or it can dip. But Nifty doesn't go that way. That you would have known that. And that is the reason we are doing this more conservatively in NiftyBees, so that we can be little more risk averse. So what is NiftyBees? NiftyBees is a ETF, which is like we used to buy NiftyBees in quantities, in units, and that is like a 1 unit of NiftyBees is like 1/100th of Nifty. So say suppose if NiftyBees, if you are buying, you need to buy 100 NiftyBees, that will be equal to one lot size of Nifty. Actually, that is not exactly true. It will be like little lesser than that, but for the sake of understanding, we'll keep it that way. So to sell one call option, we need to buy, actually as I said, like we need to have 100 quantities of NiftyBees is equal to 1 Nifty. And also I see more like Nifty lot size is 50. You need to have 5,000 quantity of like NiftyBees. Right now NiftyBees as on today is somewhere trading around 194. So imagine how much it will be for 194 into 5,000 quality. That much capital is required for trading, for doing this strategy. So in this strategy, what we do is like we sell ATM strike in the multiples of hundreds in Nifty for liquidity. We even get for in multiples of 50, but we do it in hundreds, so that for liquidity. So we, as I said, like they go like 10% or 20% from the spot price for risk purpose, but we are going to sell ATM strike in this case, because if we go a little more away, we are going to collect very less premium, so which is not going to help us in any way if we are like market is not moving anyway. So just for this video purpose and testing purpose, I am taking ATM strike. So also like last video, you can see in the card which is in the eye icon Abu, or maybe in the description I'll give that. I am explaining the same thing in like last week. I have given something called Nifty returns versus ATM call option returns. So in that I have given simulation of how the ATM call option buying and selling those, like given the results. Same simulation we are going to see in this case, and that's why I'm not going to take you to Opstra in this video this week, but we'll be using exactly the same, but it is a little ultra of that. I will just explain in the next slide, so you can see the results in that. So just like every video in this channel, we are going to do this. We're going to start the trade at 9:30 a.m. of the last month expiry day, and we'll be like closing it in the current month expiry at 9:30, and absolutely no adjustment. So this is very much suitable for working professionals and part-time traders. And in this I'm giving manual backtesting for the last 4 years data on Nifty CE. Disclaimer: this is only for educational purposes. Please do your own research before entering any trade. Okay, so these charts I have given exactly these tables like from the last month. Only thing what I have done is like last month you would have seen like this column will be buy and this column will be sell because we were buying that time. We were buying ATM call option, and because of that see we would have bought at 177 and we would have sold 2 rupees and we would have ended up for loss of 13,000. But as because here we are going to sell at 177 and market didn't go above, so we are buying back at 1 rupee or lesser than that, and because of that we are earning profit of 13,000. So this is what we are doing consecutively every month over month for the last 4 years. So what is the result that we are getting for these last 4 years? 2019 was a profitable month, which is not very good profit. This is a conservative thing, so you cannot imagine of a very good profit as well. And you are getting a profit of 16,900 odd. Also, you would have got profit from Nifty Bees because you can see like 10,900 is where Nifty was ATM call in the month of January, but by December you can see it has moved some 1,200 points. So similarly, Nifty Bees also would have grown some 10% or maybe. So that 10% plus this profit totally put together, you will be getting the profit for 2019. 2020 was an outlier year where we faced the corona, because of which we had to market had to dip from 12,000 to even it went to 7,500 point, and again it went up to 12,900 or 13,000. So because of this volatile movement, in this case we are seeing 2 lakh loss because we were in sell position, and in one point of time we can see like we were selling 732 which went to 1,253. We sold 249 which went to 830. We sold 355 which went to 1,061. These things will not happen in a normal year, but corona year is an exceptional year. You can again see these 2 months, 271 to 1,182, 282 to 1,076. These here you hardly see 517 ones. So this outlier, you can, this is like once in a decade, once in 10 years these things happens. But if you're a long time person who will not be worried about these things, then maybe you can get into this. As I said, even in this 2021 also you can see like okay, this year also like 3 times it has went from 420 to 2,345, 254 to 940, and 215 to 956. Still we are having loss of only 58,000, not like a 2 lakh that we saw in the year 2020. And 2022 only till August we are done, so we still have 4 months to go. Now we are sitting in a profit of 26,000 odd. So put together for the last 4 years, we can see like if you have like done this option selling, we have ended in loss of 2,15,000. If we have not done anything, also we would have made a spectacular profit. But anyway, this is the idea behind this, like you need to get rental income, and whether this is going to perform over a long period of 10 years or so. In that case, maybe okay, we can try this. But for the last 4 years, this strategy on a monthly basis, if you are selling ATM, it has not given very good profit. That is not very good profit. It has not given profit. It has given loss of 2 lakhs. Now we are going to calculate CAGR based on our total investment. That is, we have invested on Nifty Bees as well as the selling of ATM call options. So you can see like in 2019 January month, Nifty Bees was trading at 114. So at that time, for you to buy 5,000 quantity, you would have required 5,70,000. That time maybe lot size was 75, 25. I'm not very sure, but we'll just keep it this way. We'll just consider everything as 50. It might not be accurate, but directionally this is going to be helpful for you. And I don't see any other videos giving back this strategy results of like Nifty Bees, because other strategies that I give back test, that is like that is fine because that is kind of my strategy. But this is something you can see in almost every YouTube channel. They will have at least one video on covered call, and definitely most of them would have posted the covered call on Nifty Bees. But seeing that, I thought like let me see back test this and let me see whether it is really giving profit or not. So when I saw that, I was astonished to see that rental income is we have not collected for the last 4 years. Please correct me if I'm wrong here. That's what I mentioned here, because as per my calculation and my analysis, I found that it is getting into loss. Now coming to CAGR again. So the 114 that we did, now the current value, this is investment value, present value is like 2022 August is what I have taken, as it is trading at 194.6 something. Its present value is going to be 9,65,000. So, and overall loss is like for the last 4 years loss we have to see, which comes out around to be 2,15,000. Now overall profit or loss will be like this profit plus the present value minus investment value, that profit. So if you add that, this is a loss for this year, almost for the last 3 years. So overall you are getting profit of 1,79,000. Now CAGR should be calculated on the principal. So here principal was like this was the investment amount, and again for selling option I have given 2 lakh buffer. So actually in this 2019 year the investment amount I would have taken as 7,70,000, because you can see like for selling on naked call option you need at least 1 lakh, and again if you are like consecutively losing for few months then you would have lost maybe few 10,000, 20,000 or whatever every month, and you would have end up on maybe 1 lakh I have given buffer. So every year I have given 2 lakh as buffer. So 2 lakhs plus 6, 5.7, 7.7 is the investment amount, and we are ending in a profit of 1,79,000. That turned out to be CAGR, that is compound annual growth return per year, which is 11%. This is very good return considering our FD or RDs, but comparing to few of mutual funds and few other good investments, this is not a very good investment. But if you are like going to stick on to it maybe for several years, this might turn out to be 15 or 20%. If so, then it is good. But right now I cannot commit on that because I have not seen that. So maybe in the next week video, that's what I'm going to give, like for a weekly how it is going to perform. Maybe if it do that, if it is going to give a better CGR, if it is going to be performing better than at least monthly, then maybe we can adopt that. What I will be doing in the next week is like I'll be doing the same thing for a weekly basis, because we see like a weekly might give more return, but that is like a little more complicated process, because here only like 48 weeks, almost 44 weeks I have given back testing. That is going to be like 52 weeks a year. So you can imagine like almost 200 weeks I need to work out. I'm not sure whether I'll be able to do that, but whenever I'm posting, whether it is next week or the following week, I will definitely give a video on that. With that, we can do the comparison. Now, this is one thing. So 2020, if you are doing that time, Nifty BeES was at 129. So investment amount was 6,45,000. Again, that year was like loss in these 3 years we have to add together. This one we can ignore. So that will be loss of 2,32,000. Overall profit was just 87,000. That again turned out to be CAGR of 11% from 2020 till date. 2021 again Nifty BeES was at 148. Similarly, I have given for every year. Now, what we could have done one more thing is like we can do adjustment if market rallies up more than 500 points. In few cases where I talked like a market was like 732 to 1253, you can see like we would have entered at 8,500 and market would went to 9,800. Maybe this was a corona time. Maybe you can leave this. Maybe in some other cases, say suppose you can come to this year maybe. Say suppose market is at 14,400 and if market went to 15,000, maybe you would have reached somewhere around 4,900. That time maybe you could have sold one 4,900 put option, or maybe even at least 14,500 put option to gain some money. Say here 16,700 to 17,700, 15,700 to 16,700. This time you would have reached 500 points ago, maybe 16,200, 17,200. That time you can sell maybe ATM put option, or you can sell at least 300, 400 points below that, maybe 16,000 put option, 1,500 put option, even 15,700 put option. So these things will give you little money, so that you will not end up in total of 34,000 loss. Maybe that would have reduced to 5,000, 10,000 less, which in turn would have given like overall loss little lesser than that, which again increase your CAGR overall. So again, as I told, this is a conservative summary, because initially I told like we need not have 5,000 FTBs, somewhere around 4,600 will be sufficient exactly. But for easy understanding purposes, I'm giving 5,000. And as I mentioned before, CAGR I have added 2 lakhs extra for as a reserve for the put op call option that we sold in IATM. So considering all those scenarios, still conservatively we are getting 11% return for the last 3 years. This year is not yet complete, and also you should not see CAGR just for a year. Maybe you can wait for a year or two, then you can get to know, okay, this is performing, which is performing and which is not performing. But still, at the end of this video, I just want to say this. I was not very much satisfied looking at this result, because I expected CAGR to be a little more than this. But nevertheless, this is good enough if you are like if you're okay with this 11% return, which many of them with a very big capital will be okay, because they will be like partially allotting something for not to take so much of risk. So for that category of people, they can definitely try this. So I hope this would have helped few of them at least. Let's meet again in next video in some educational video or any strategy based video. Until then, thank you. Bye.